Good morning, Namaskar, Suprabhat, Vadakkam, Sasrikal to all of you. I welcome you all in today's session of Income Tax. I'm C. Ankit Sharma, your Income Tax faculty for the session. Today we will be discussing the remaining provision of salary topic in which till now we have discussed the basic concept, the meaning of salary, advance salary, arrear of salary, allowances, taxability provisions, some perquisite taxability provisions, compensations, etc. In the last session, we have discussed multiple perquisite provisions like rent-free house, car perquisites, facilities of club, membership, etc., etc. And I believe you must have gone through with all those provisions. And also, you are really, really working hard to achieve the goal of life to become a chartered accountant as soon as possible. So, students, a very welcome once again to all of you. Shalini raised her hand. She wants to ask something. Yes, Shalini.
सर चैट डिसेबल है।
What is visible?
चैट डिसेबल है चैट।
Chat disable hai. Nisarg, please enable the chat. Okay, it has been done, Shalini. Okay. So chat now has been enabled, students. So you can send your queries or whatever you want to send. And I have given some illustrations also for the purpose of your homework. And I believe you must have tried all of them. So today is a very, very important class because today we will complete the perquisite part of our salary topic in which there would be that endgame perquisite also. We will solve some illustration also and MCQ topic also I'm going to take in the starting of the class right now. After this starting session, I will ask to solve some MCQ. So you would have some kind of practice also. And be prepared for the last session, which would be day after tomorrow. And my request to all of you, because in the last session, we are going to discuss multiple questions from test your knowledge, some case scenario, some last year questions. So for that, it is very important that you should revise once the provisions we have yet till now we have discussed. So because from day 1 of salary till day 5 of salary session, kindly revise all the provision before the last session is going to be held, because if you have revised well, you will be able to understand the provision very easily. Okay. So once again, let me see if there is any query. Mujahid, good morning. Navneet, good morning. Linga, good morning. Tanisha, good morning. Theosami, good morning. Sakti, good morning. Ajay, good morning. Good morning, Shalini. Good morning, Dhanlakshmi. Good morning, Santosh. Good morning, Mr. Zafar. And good morning, Satish. Dhanlakshmi is saying, today you told to remind about interest-free or concessional loan. Yes, yes, definitely. I believe that I have given you an example, illustration number 21. In that illustration number 21, there were point number 6, which is connected to that housing loan interest provision that we are going to discuss today, of course. And for that, let me ask you some provision, and I want to see who is there to give me the answer. So I will ask the tag team to unmute you. And in the last session, we have discussed a provision of, we have completed the rent-free house provision. In that rent-free house provision, there was a case of temporary rent-free house, which has been provided to an employee when he is shifting from his job from a city to the another city. So for certain number of days, he would be allowed to avail the facility of any temporary rent-free house in a hotel, guest house, lodge, etc. So who is going to tell me the provision of taxability in case of that temporary rent-free house? Then Lakshmi wants to give the answer and Shalini. Okay, then Lakshmi, you proceed. Then Lakshmi, I'm not able to hear your voice. Please, a little louder. Lakshmi, you are not audible. I guess some issue with the Lakshmi. Anyone else? Shalini also wanted to explain, I believe. Shalini, you proceed.
If employee goes more than 15 days and for the transfer of employee,
Correct.
then it's taxable.
How we will find the taxable value?
So let me think. So not remember.
Okay, no issue. Okay. Then Lakshmi wants to tell. Yes, then Lakshmi, please proceed. Lakshmi, you are still not audible. No, I am not able to hear your voice. It's very, very slow. Anyone else who wants to tell the taxability provisions of a rent-free house in case of shifting of job from one city to another city? No, the Lakshmi, look, it's very, very low. I'm really, really not able to understand what you are saying. Just a very, very, very slow voice is there. Anyone else wants to tell? I am noticing only two students are interested in giving the answer from last 2 or 3 sessions. Shalini and the Lakshmi, only these two students are interested to answer the questions. Okay. Ajay wants to tell. Yes, Mr. Ajay.
Morning, sir.
Good morning. Please.
24% of salary for the whole year or actual charges paid by the hotel.
Correct. And for that 24% of salary, what is the meaning of salary, Mr. Ajay?
Basic pay and dearness pay and all taxable allowances.
Exactly the salary which we have discussed in the above cases also. All monetary payments for the duration the property has been acquired for that number of days. But DA would be only that part which is for retirement benefit. Correct. Thank you, Mr. Rajat, of course. So now one more question from my side to all of you. There was a case in the rent-free house in which assessee, that means the employee may have two rent-free house simultaneously. In that situation, what is the provision? How do we taxable those cases in which an employee is having two rent-free house simultaneously? What is the provision for the taxability of that case? Shalini again wants to answer. Yes, Shalini, please go ahead.
So if employee having to rent-free house in other cities, different cities, then फर्स्ट हाउस जो होगा वो अप टू 3 मंथ्स टैक्सेबल होगा एंड अगर वो मोर देन 3 मंथ्स रहता है तो फिर दोनों टैक्सेबल होंगे.
करेक्ट, बिल्कुल सही. पहले 90 days और 3 months वी कैन से फॉर इनिशियल 90 days और 3 months दोनों हाउसेज में से जिसकी लोअर टैक्सेबल वैल्यू आएगी उसको टैक्स
लोअर विल
करेंगे. उसके बाद हम बोथ हाउसेज की टैक्सेबल वैल्यू को टैक्सेबल करेंगे जब तक कि वो एक हाउस को वैकेट नहीं कर देता. वेल डन. सो we have discussed this concept and then that there was a concept of car perquisite. So can you tell me in chat box how many of you have made that car perquisite chart yourself? I've asked you in the class that please do make that chart yourself. So how many of you has actually prepared that car perquisite chart yourself? I want to know. So please tell me in chat box. Aradhana Vasti saying good morning. Good morning, Aradhana. Monisha, only one accommodation is taxable. Okay. Let me see how many of you have done that. God, T. Anil is saying, I have prepared chart on my own. Very good. Nagaraja is saying yes. Tiwari Radheshyam is saying yes. Prerna is saying yes. Mr. Ajay is saying yes. Harsh is saying yes. And Adil also prepared. Well done. And those who have prepared that chart, did you really find it now difficult if you have prepared it yourself? Now you can see if you have prepared after that chart presentation, which has been prepared by yourself, I believe the provision must be more clear and more easy to understand. And believe me, if I'm not wrong, those who have prepared that chart now must have a photogenic memory of that chart in their brain. They just need to know which case is applicable. If I'm going to tell you that this case is applicable, your brain will automatically show you that chart. And you can find it out. This case, taxable value is this without even remembering the provision. I believe you can see the chart yourself without even actually seeing it. Your brain can check that chart because it has been fixed in your memory. If I'll ask you now that if car is owned by employer, suppose car is owned by employer. So we have to solve that case. Car is owned by employer. So your brain will show you, okay, in the second part, there was a case of car owned by employer. Clear? And expenses met by employee. So your brain will tell you, okay, the first part was car owned by employer, expenses met by employee. And suppose that is 100% used for private purpose. So what is the taxability? And let me tell you, those who have prepared chart, I believe most of them can visualize that chart right now in their brain. That okay, car owned by employer, that was second case. Expenses met by employee, that was first part of that case. And in that, it has been used for 100% private purpose. So what do I need to taxable? That is, if owned by employer, 10% of actual cost. If it is on rent, then rent charges. So you will see the power of writing something with yourself. So believe me, that is a very important perquisite. And if you make the chart of that perquisite yourself, it really helps you to understand that perquisite especially. Harsh is saying, no, sir, after preparing my own, now I'm able to recall automatically. Exactly. That is scientifically proved. But whatever you have write it down yourself. That things actually gives a lot of impact on your brain, and your brain is actually understand how to recall it later. Navneet specify Harsha actual expenses paid, 10% cost or rent, 10% cost of the rent, actual rent. Exactly. Shamli is saying yes, correct answer. Dhanlakshmi, rough chart I made it, sir. Kindly make the proper chart, Dhanlakshmi, so that will help more. Shalini also prepared it. Well done. So, in the today's class, let's start with the very, very beautiful thought for the day. And let me tell you, it's a very interesting thought. If you read it deeply, you will understand the meaning of it. And it's a beautiful meaning. And of course, for all of you in your student life, you will feel that yes, it relates to us. It's very important to be positive all the time of your studies. So being positive, thinking positive is very, very important. It encourages you, it boosts you, it gives you more confidence. So always be confident. And you can see this thought for the day will said this being positive thinking beautifully. It's a very, very powerful chart, I believe. And when I have read that, let me tell you, I was very impressed. I actually read this quotation yesterday only. And after that, I am really, really, really impressed, and I made this for you. And it says, sometimes when you are in a dark place, you think you have been buried. You thinking you are depressed a lot of time of your life of this CA journey. There would be situations, there would be time when you will feel that you are very depressed. There is no hope, etc. Technically, but think in another way. Think that is not the dark place where you feel you are buried, but that is actually the place you have been planted. So that is just the time, that is some time of the dark place, and you will rise. So you are not depressed, just makes yourself that you have been planted somewhere. You are going to do something great in your life. And that's why This quotation actually impressed me a lot. Yesterday, I have just gone through with this quotation somewhere. And the story of Thomas Edison, it is very, very related to this quotation. And I will tell you that story of Thomas Edison, and you will see the power of positivity, the power of being positive all the time. It always helps you in every situation. So it's a very, very beautiful quotation for all of you. Now we will discuss some MCQs. So there are some MCQs. Okay. Question number 1 for all of you. After that MCQ, please remind me that first of all, we will discuss that interest calculation, concessional rate of interest provision, and then we will move further for our provision part of today. So Rakesh received 25,000 per month as basic salary from ABC Limited. He is also provided dearness allowance, 10,000 rupees per month, forming part of retirement benefits, and has been provided rent-free accommodation in Alwar. Population is 45 lakh, which is owned by employer. So in case of rent-free house, first of all, you have to find it out whether is the property owned by employer or it is on rent, because the provision would be changed. The market rent of such accommodation is 3,000 per month. You have to find out the taxable value of rent-free accommodation. So before solving it, kindly let me know which provision would be applicable in this case. Owned one or on rent. Owned one or on rent. Then we will find out the answer accordingly. Pooja is saying A. Navneet is saying 36,000. Tiwari Radheshyam is saying owned. Shalini is saying owned. Kuldeep is saying owned. Harivansh is saying owned. Shamli has given the answer. Dhanlakshmi is saying owned. As I have told you in the class when we were discussing the provision of rent-free house, this market rent is irrelevant. This information is just to misguide you. There should be rent paid. If it is the case of that situation in which rental accommodation would be there, then there would be information like rent paid by employer. Because of in this example, there is no information like rent paid by employer. So in that way, it should be a case of property owned by employer. And because property is owned by employer, then population matter. And you can see because it's more than 40 lakhs. So 10% of monetary salary, we will take as rent-free house value, in which DA and basic both going to be included. And accordingly, we can find out the solution. The correct answer would be 42,000 rupees. Second, Chavi received 25,000 per month as basic salary from ABC Limited. She also received DNS allowance of 15,000 per month, forming part of retirement benefit, and has been provided rent-free accommodation, which is taken on rent in Delhi. Population exceed 40 lakh. Employer has paid monthly rent. Now, because the question has been clearly saying that employer has paid rent. So that would be the case of property is on rent. When any property is on rent, then what is the taxable value in that situation? It would be 10% of salary or rent paid, whichever is lower. That would be my taxable value. So the 10% of salary in this case would be 25 and 15. That means 40,000 into 12. That means 4,80,000. So 10% would be 48,000. But the rent paid has been given in the question 10,000 per month. So it would be 1,20,000. The lower is going to be taxed. So what is the correct answer of second? The correct answer would be 48,000. I hope it's clear. So the correct answer is option number B in the second question. Why students are giving answer D? We have to take the lower of it. Why you are giving the answer D? Who has given the correct answer D is Ajay cannot be D. Tiwari Radhesham cannot be D. Understood? Okay. Moving on to the next question. Chavi received 25,000 per month as basic salary. You can see rent-free house also when we go through with the provision of rent-free house. We find it really complicated because there are multiple cases, unfurnished, furnished, etc., etc. But when you will, once you will understand the provision, and then if you will go through with the questions, you will find it out. It is not that difficult. If I know what situation I need to apply in that particular rent-free house provision, it would be really easy for me to apply that provision and find out the correct answer. You can see the third question is, Chavi receives salary of 25,000. 15,000 DA forming part of retirement benefit and has been provided rent-free accommodation owned by employer with effect from 1st October 2025. Population exceeding 40 lakh. Market rent is 2,000. So that is irrelevant. But because the house has been provided from October, so October, November, December, January, February, March, only 6 months salary I have to take. And on the basis of that, I have to do the required calculation. So what would be the correct answer in question number 3, students? It would be 24,000 rupees. Of course, that would be 24,000 rupees. Got it? Any confusion? It is easy. It's just a mathematical calculation. The problem is we are not correctly revising the provision. We are not doing proper practice, or the provision is not actually retained by us properly. So if you are able to remind and able to recall the provision as per the requirement of question, then numericals are really easy to solve in all cases. Moving next, question number 4. Chavi received 25,000 per month as basic salary from ABC Limited. She also received DA 15,000 forming part of the retirement benefit and has been provided rent-free house in Delhi, population exceeding 40 lakh from 1st April 2025. The accommodation is owned by the owner. The employer has also provided furniture original cost 50,000, WDV 40,500 with effect from 1st October 2025. The market rent of the accommodation is 12,000 per month. So again, this is irrelevant for me because there is not rent paid by employer. Now on the basis of above information, we have to find out the taxable value. So what would be the taxable value in this case, students? Let me see. Golti is saying everything will be provided in the question itself, right, Sel? Exactly. The numerical questions having is this thing very, very interesting that everything has been in the question. We just need to know how to solve it. So everything is there. If you are able to recall the provision correctly, and if you are able to understand the question correctly, that is really, really easy to solve the answer very easily. So Avinash is saying option number A is the correct answer. Theosami is saying A. Ajay is saying the correct answer is A. Navneet is saying A. Ashwini is saying A. Shamali is saying A. So till now, all answers, whatever I have received is correct. Correct, Pooja. Correct, Tiwari Radhesham. Well done. The correct answer would be 50,500. In this case, we will calculate the rent-free house value for the whole year. That would be my salary, 40,000. 4,80,000, 10% of it would be 48,000. That would be unfurnished accommodation taxable value. But furniture also provided. So we will take the original cost of furniture and 10% of it. But students, you have to see it has been provided to us from 1st October. So only 6 months valuation we need to add. That is 10% per annum. So technically 50,000, 10%, and that is for 6 months. So that will come 2,500. So total taxable value would be 50,500. Absolutely right. Now these are for car perquisite provisions. सर कुछ बैकग्राउंड साउंड आ रहा है काफी डिस्टरबेंस पीछे से सर जी काफी बैकग्राउंड साउंड आ रहा है पीछे से फ्रॉम आई गेस आपके पार्ट पर उधर से ओके थैंक यू ओके चलो question number 5 it is for car perquisite and let me tell you those students have prepared the chart of car perquisite now when we will read this provision they can visualize their chart and accordingly they can put the question on that specific case and automatically they will find out the answer. You can see the benefit of preparing chart now. Employer provides a car below 1.6 liter capacity. 1.6 liter or 1600 cc, one thing, okay, same thing. Along with a driver to X, partly for official, partly for personal purpose. The expenses incurred by the company. So because the question say employer provides a car. So that means my car perquisite when car is owned by employer case activate. Clear? Car is 1600 less than 1.6 liter capacity. Along with a driver. So driver also there. Used officially and partly for personal purpose. Expenses incurred by the company. So now who is actually paying the expenses? Employer is paying the expenses. So this part activate. In this part, car has been used for official and personal both. So last part has been activated. In the last part, the provision is if it is up to a certain cc capacity, then we will take 1800 rupees per month. Otherwise, 2400 rupees per month. And driver salary 900. And because it is less than 1600 cc, so the 1800 plus 900 provision will be applicable into 12. So my correct answer would be of question number 5 is 32,400. As soon as you are able to visualize which case is being applicable in this question, you would be able to find out the correct answer. Next is Garima received this much of salary, this much of DA. She has been provided with motor car. Provided means the car is owned by employer. Clear? Engine capacity exceed 1.6 liter. We will see it. Owned by employer for her personal use. So she is using it for personal purpose. Now we need to see who is actually paying the expenses. Is it employer or employee? Expenditure incurred by employer. So we are over here. And now car has been used 100% for private purpose. The running and maintenance of the motor car during the relevant period is 15,000. The taxable value of the car, we have to find it out according to the information given. What should be the correct answer in this case? Please write it down, question number 6 option. So if you'll write it down, question 6, then I would be able to understand which question you are actually answering. C is saying by Ashwini. Pooja is also saying C, I guess. Anyone else? Shamli is saying C. क्या मेंटेनेंस कॉस्ट ऐड होगा क्या हरिवन? That you have to find it out. Thusami is saying C. The Lakshmi is saying 15,000. That means option A. Shalini is saying C. Avinash is saying C. Ajay is saying C. Golti is saying C. Adil is saying C. Pooja is saying C. Now, you know what is the problem? The problem, we do not understand the question and we start solving it. I intentionally made this question. The correct answer is option number D. Can you find why option D is the correct answer? Mustafa is saying nil. Why, Mustafa? Why it's nil? Harsh is saying cost is not given. So, if cost is not given, the answer would be nil, or there would be some other reason. The correct option is nil. Who will tell me? No, Shalini. Cost is not given is not the reason why it's nil. Suppose in this question, low. Cost also given. Cost has been also given 2 lakh rupees. Still, it would be nil. Why? Navneet is saying expenditure exceeding. No, that is not the correct answer. Tiwari Radheshyam is saying employer owned for personal purpose. No, no, the answer is wrong. I believe nobody has given the correct answer. You forget the basic principle of taxability. Car owned by employee, car owned by employer. And this case is taxable for a specified employee only. Remember, this case was applicable for specified employees only. And you can see in this example, Garima salary is only 2,500 rupees per month and DA only 1,500 rupees per month. That means only 4,000 rupees per month she's getting. So her basic salary, her salary is not exceeding 4 lakh rupees. She is not the director. Her salary does not exceed rupees 4 lakh rupees, and she does not have the substantial interest. And you will see in this question 5, you may be thinking it is also the same case, but I have specifically written over here is specified employee. And in this example, there is no information regarding that person is specified. So on the basis of information given, she's not a specified employee. And because she's not a specified employee, so when car is owned by employer, that part is only taxable if you are a specified employee. Understood? So please read question properly. I intentionally did that. Now you know what will happen. Because you did this mistake, we always learn from our mistake. We always learn from our mistake. And of course, whenever you lose something, you're not able to win something. If you are losing something, try to learn from your mistakes. As Mahendra Singh Dhoni said, if I win, I celebrate. If I lose, I learn. So it's not always that failure does not teach you. Failure can teach you a lot of things. Failure can teach you that this thing cannot be done like this. At least you will know the one way, the way by which this thing or this particular thing cannot be done. So that is also a part of your experience and knowledge. So because intentionally I have made this kind of example, because suppose if this kind of example has been asked in the question in examination, and you're not aware that I should see that whether employees is specified or not. Now in every question, at least for taxability of perquisite of car, first of all, you will check this also whether specified or non-specified case. Understood? Monisha is saying not as specified. Correct. Mustafa is saying, sir, your MCQ of chapter 1 is also tricky and smart. I solved all and now I can solve any tax calculation only seeing amount. Thank you for the appreciation. The car was used exclusively for official purpose, Pooja. No, it has been written, it has been used for personal purpose. Chalo. Next is, now you would be, of course, able to solve all the examples. Now you can see in this question also, I have written specifically specified employee. So Gupta has been allotted a motor car with chauffeur by the employer, which is used for both official and personal. The entire running expenditure of car amounting to 64,800 rupees was met by the employer in previous year 26-27. The cubic capacity of engine of the motor car exceed 1.6 liter. The perk value taxable in the hands of Mr. Gupta if he is a specified employee. And the correct answer of this question would be option number B. Fine, you can read it. I will upload with the answer so you can go through with these example of rent-free house and car perquisite particularly. So because there are multiple questions, so now you will know how to solve these information in the question. Okay. Well done. Moving ahead. Now that interest provision, I would like to discuss with you. And there was a example related to that in your study material. So I am going to solve that directly. In the salary on page number 3.93, there is a illustration number 21, point number 6, which is regarding that concept of taxability in case of concessional or interest-free loan, which has been provided by the employer to employee. Now, what is the concept behind it? The provision is very simple. What is the rate of SBI Bank? You have to compare it from that rate of interest. So now you can see the question says that employer provide employees 6% per annum housing loan. Housing loan at the rate of 6% per annum. Amount outstanding on the last day of the preceding year is on 31st March 2025 is 6 lakh rupees. The loan amount is 6 lakh rupees. Shri Bala pays 12,000 per month towards principal on first of each month. So what exactly situation? On 31st March 25, the loan amount is 6 lakh. The rate of interest charge is 6%. And the repayment is like this, that Mr. Borrower, who is Shri Bala, he pays 12,000 rupees per month on the first day of the month. On the first day of the month, he pays 12,000 rupees towards principal amount. How does it affect my solution? I will tell you. The SBI comparative rate has been given 10%. So the benefit is 10% was SBI rate, 6% we are charging from our employees. So the benefit is, of course, 4%. So this would be the taxable value of the perquisite. But how it needs to be applicable? So when we gone through with the provision of housing loan, the concept says that you have to calculate this taxable value of 4% on the outstanding amount of loan. And a very interesting line was there, outstanding amount of loan at the end of each month. At the end of each month. So because my previous year starting from 1st April 2025 till 31st March 26. Clear? And before this 1st April 25, the loan amount has been given on 31st March 25 is 6 lakh rupees. Now I have to start to calculate the taxable value of the perquisite of 4%, finding out at the end of the each month what is the outstanding amount. So if it is on 31st March 25, it was 6 lakh. And the question says he will pay 12,000 rupees per month as principal amount at the starting of each month. So in the month of April 2025, at the end of April, how much loan amount would have been outstanding upon me. If 6 lakh was on 31st March 25 and employee is going to pay 12,000 rupees per month at the starting of the month, then what would be the outstanding amount at the end of April 2025? It would be 5,88,000. Clear? Then on May 25, it would be 5,76,000 as on. So you have to calculate for every month what is the outstanding amount of loan. And on that, we have to calculate 4% taxable value for each month. Here is the solution calculation. You can see the perk is 4%. Now what we do need to do, we have to find out the maximum outstanding balance as on the last day of the month. So April end, it would be 588, then 576, then 564, then 552, then 540, then 528, 5,16,000, then 5,04,000, 492, 480, 468, 456. So you have to do this. And this is just mathematical calculation. There is no specific technical provision of income tax. You just need to reduce the principal amount and you need to find out the balance at the end of each month, outstanding amount of principal amount. Now on this, we have to calculate the interest, 4% for particular month. So that means 4% for 1 month. 1 by 12, that would be this value. Again, 4 by 100 into 1 by 12, this value. For each month, you have to do this. So you have to calculate interest 12 times to find out the taxable value of the perquisite. So you have to automatically needs to find these 12 values you have to find out. And then you have to done calculation of finding out the taxable value at least 12 times. Now more calculation can lead to the probability of more mistakes. Even if you have done one mistake in the calculation, any one of it. Suppose you have applied with calculator and in nervousness you have mistakenly take the percentage 5% or you take 2 months calculation. So even if one amount has been calculated wrongly, your answer would go wrong. So I have a second way also to solve this kind of question. So these calculation not required to be done. These 12 times calculation you can skip. You have to find all these value. In my case also, you have to find each month end value and then do one thing, aggregate all of these value. Aggregate it. So total would be 62 lakh 64,000. Clear? You do not need to do this calculation. This is more mistake prone because you have to calculate interest 12 times. So just take the sum of all these payment, that would be 62 lakh 64,000, and then you can find out this value in just one calculation. 62 lakh 64,000. The rate of interest is 4, the taxable value. Just calculate 1 month interest on this aggregate value, and that would come exactly the same. So it will save your time because you do not need to calculate 12 times the taxable value of the perquisite. And again, the addition of it you have to do. You just take the total of these, just take the total of these and apply directly 1 month interest on this value. So that will saving your time. And of course, it will avoid for that mistake you could do if you will solve these interests separately for each month end calculation. So time is money, time is everything. So you will saving your time, and of course you are avoiding a certain level of mistake which can be done in 12th calculation. Understood? So this is what I wanted to tell you, that in case of interest-free loan, the study material suggests you to solve. You can also calculate as per the study material also. If you find that way is easy, that is also. It is mathematics. You can use the alternate method also. The things is same in this case. Okay. So that was the thing. I've explained it to you. Aditya is saying, sir, how 5,88,000? So Nagaraja has told him. Got it, Aditya, I believe. Okay, so that will going to save your time. Yes, एग्जाम में ऐसे करके आ सकते हैं बिकॉज ये कोई मेथड इनकम टैक्स प्रोवाइड नहीं है. इनकम टैक्स ओनली जस्ट प्रिस्क्राइब द taxability way that you have to apply interest, the concessional part, on the closing balance of each month. Income tax does not provide that you have to calculate the interest every month. This is a mathematics. You can solve this question this way also, and you can solve it that way also. So exam में भी आप ऐसे कर सकते हैं. It would be correct. Sure. So that was interest provision we have discussed. Moving on to the rest of the perquisite, we have to complete those perquisite now. So moving on to the notes. Nothing much actually has left in this case now. We have discussed the interest-free concessional loan, touring traveling provision has been discussed, free gift, etc. So we are on valuation of use of movable asset. Very simple. If employer provides any movable asset to an employee to use, in that situation, what would be the taxable value? We are going to find it over here. And it's so easy to understand that most of the provision we have already discussed regarding it. Use of any movable asset. Why there is not immovable asset provision has been written down? Because immovable asset is already discussed in rent-free house. So when employer is providing you a rent-free house, what it is? It is an immovable asset giving to you for use. So only movable is here. So if you are thinking where is the provision of immovable, so we have already discussed those provision in rent-free house concept. So use of movable asset by the employee or any member of his household. The good news, if employer has provided you laptop and computers, and if you are using it, whether for official purpose or personal, whatever has been written in the question, the taxable value as per income tax would be nil. Even if it has been written specifically that laptops are using for personal purpose, does not matter. The rule is we will take the taxable value as nil. Car and other asset specified in rules. So if the employer has been provided a car to you to utilize, so we have already gone through with the car perquisite taxability. If the car has been provided, then if it is for personal use, the other concept, both purpose, alag concept, official purpose, alag concept. So we have already discussed this concept from car perquisite. The remaining other movable asset, if employer has been provided you any other movable asset like TV, fridge, etc. So we have discussed that provision in rent-free house furniture case. Remember, in case of furniture, it is also a movable asset. So we have already gone through with this provision also. And you can see car is also movable asset. And this provision exactly applied when the car has been provided. 10% per annum of actual cost of the asset or amount of rent paid by the employer as the case. So technically, all these provisions we have discussed, this is new only. That laptop, computer, always nil. Any other movable asset except laptop and computer, technically we'll see it is having the same provision, 10% per annum of the actual cost or the amount of rent as the case may be. So this prerequisite has been completed. Now this is important, that is valuation of transfer of any movable asset. So in the above 13 number point, employer was just giving you an asset, movable asset to use. He's not selling that asset to you. But in point number 14, what is exactly happening? Employer is providing you, employer is transferring you his movable asset at concessional price. Suppose employer is having a car. Value is 2 lakh rupees. Current value is 2 lakh rupees. And he is transferring that car to his employee for 2 lakh rupees. So what is the benefit? Nothing. No perquisite. When it would be perquisite, when you are getting any asset from your employer or you are purchasing any asset from your employer at concessional price. So if the current cost of the car is 2 lakh, and suppose you have to pay only 1,80,000, then 20,000 would be the perquisite. The main focus in this perquisite is to find out current value of the car. How we are able to find out the current value of the car, that would not be given in the question. We have to find it out after charging a certain rate of depreciation. Now the good thing is, we all know what is the depreciation. So the specific depreciation rate has been provided. We have to apply that rate for certain number of years. And after the value which has been arrived after that depreciation would be the current value. So if employee is paying less than that, the difference would be taxable value. Let me show you how. Computers and electronic items. So if employer is providing computers and electronic items, is selling technically to employee. Means data storage devices like digital diaries, printer, etc., not TV, fridge. These would not fall in this category. TV, fridge, etc. would be fall in third category. So we are talking about only those things, those are connected with computer. Only those electronic items, those are connected with computer. So how do we need to find out the current value? It says actual cost of such asset minus 50% of the cost for each completed year. So the depreciation rate has been prescribed at 50% for each completed year of year for which asset has been used by employer, and the method is reducing balance method. For example, let me show you. Employer purchase an asset or a computer, we can see, for 1 lakh rupees on suppose 10th January 2023. Clear? This computer has been sold to employee on 10th November 2025 for rupees 8,000. So find out the taxable value. So first of all, we have to see how much completed year are here. We will find it out from the date of purchase till the date of transfer. So from 10th January 23, the first year would complete on 10th January 2024 and 10th January 2025. But the transfer is on 10th November 25. So technically almost 2 years and 10 months this computer has been utilized by the employer. So we only need to take the complete year depreciation. So 2 years depreciation we have to apply on this computer. 1 lakh, 50% rate has been prescribed. These dep rate, please do not correlate these dep rate with the PGBP depreciation rate. That is a separate concept. Under PGBP, the depreciation rate is 40% on laptop, but these are for salary taxability. So these are separate. Do not confuse these rate with those rate. Remaining value would be 50,000. The second year dep would be again 50%, 25,000. The remaining value would be 25,000. So we can say the current value as per income tax of that laptop or computer is 25,000. And this 25,000 asset has been sold to the employee for 8,000. So technically 17,000 would be the taxable value. Simple depreciation concept. You just need to remember the rate and this thing that only completed year we have to take for the purpose of calculation. Shamli, seeing illustration 20. Yes, we will go through with that illustration also, Shamli. Do not worry about it. Harsh, yes, I will explain the illustration number 20. Do not worry. Galti is saying, so today you are going to teach annual accretion of Provident Fund, right? Yes, exactly. The end game provision going to be discussed today. Neeraj is saying, sir, we completed AS22 in accounts, so there was depreciation as per Income Tax Act. So is there? No. This depreciation rates are not those which has been explained over there. That depreciation rate you will read under income tax under PGBP head. This is for salary taxability dep rate. Do not correlate these dep rate with income tax depreciation rate. वहां की rate अलग. Gold is saying after reducing 50% per annum, can we consider? Yeah, that is not market value. That is value for the purpose of income tax salary topic. Market value could be plus or minus, but that is for the taxability of this perquisite. I will assume this would be my current value of that laptop. And if I'm paying less than that, the difference is going to be taxed. Sir, we sold 25,000 computer for 80,000, so we will tax on loss. No, that is from the point of view of employer. What would be the treatment in the hands of employer? That is going to be discussed under capital gain chapter. This is not the part of capital gain. We are just discussing what would be the treatment in the hands of employee. So in the hands of employee, the treatment would be this. What would be the loss or profit in the hands of employer? That is not the part of salary because that is a transfer of asset case. And transfer of asset would be taxed under capital gain. Mustafa is saying, sir, if time permits, can you just ask us chapter 1 and 2 questions so we can revise today that also? Chapter 1 and 2 questions, what does that mean? I did not understand, Mustafa. Which questions we are talking? Aditya is saying, sir, month is not taken for calculation. Month need to be ignored because completed year we have to take. If it is 2 year, 11 months, we will only apply 2 years depreciation. Got it? Okay. Now Balram Das want to say something. Let me see. Yes, Mr. Balram. I have unmuted you.
Yes, sir. I want to say that my problem is completely not understanding in English language.
Which problem you are not able to understand in English?
Completely not understanding, sir. I am little bit understanding, but Hindi I am proper understanding.
बट मिस्टर बलराम देखिए ना प्रॉब्लम क्या है कि जो मीडियम हमें बोला गया है इंस्टीट्यूट की तरफ से ना वो हिंदी ही अलाउड इंग्लिश अलाउड किया गया है कंप्लीटली तो हम अपने हिसाब से उसे हिंदी में कन्वर्ट नहीं कर सकते फॉर दिस आप एक मेल कर सकते हैं बीओएस को कि आपको हिंदी में भी क्लासेस चाहिए तो मे बी दे कैन टेक एक्शन बट एज एन फैकल्टी वी हैव ऑलरेडी डायरेक्टेड दैट वी हैव द मीडियम शुड बी इन इंग्लिश ओनली और मैंने ऐसे बोला भी है कि इफ पॉसिबल एंड अगर आपको कोई क्वेरी पूछनी है मुझसे हिंदी में तो मैं उसका आंसर हिंदी में कर दूंगा बट अदर थिंग्स तो इट वुड बी ओनली इंग्लिश सो आई कैन नॉट हेल्प यू इन दिस केस सॉरी मिस्टर बलराम
Achha, thank you, sir.
चलो मूविंग अहेड वी वर ऑन द प्रोविजंस क्लियर नाउ इफ द asset is motor car the same provision would be applicable. The same provision would be applicable in case of motor car also. Just the rate has been changed. It was 50% in case of computer and electric items. In case of motor car, it would be just 20%. All other provisions are same, no difference. For any other asset, if it has been transferred by employer to employee, then actual cost again the same provision but again the rate has been changed so you just need to remember these rate 50% 20% and 10% but the method is going to be changed it's slm method this is very important to remember that because in first and second case it's reducing balance method but for other asset it should be slm method let me tell you suppose this example is not of computer. Suppose it is an example of any other asset. Any other asset. Suppose it is an example of a television which has been sold by employer to employee. So if it is example of television, then we have to apply rate 10% and the method should be SLM. So in that situation, out of 1 lakh rupees, the first year debt would be 10%. That means 10,000. Remaining value 90,000. The second year debt also, because it is an SLM method, it would be 10,000. So in that case, current value would be 80,000. And we have paid only 8,000. So taxable value would have been 72,000 rupees. So in first and second case, there is SLM method, reducing balance method applicable. The rate is 50 and 20. But in any other case, the rate would be 10% and the method is also going to be changed. Once again, I am telling you, do not correlate these rates with the depreciation or AS22 rates. Those are from PGBP head. These are only the taxability from the point of view of employee, not from the point of view of employer. Okay. Value of other benefits, it's other benefit or amenities. This is again important. If there is telephone facility, if the telephone facility is there, telephone allowance is taxable. But if it is telephone facility, payments of telephone bills on reimbursement basis, etc., that is 100% exempted, non-taxable in any case. Now, 16 point is very easy. This is for your reading purpose. Valuation of specified or sweat equity shares. Suppose you are an employee of ABC Limited. And ABC Limited is providing you sweat equity shares. Generally, sweat equity shares provided to those employees. Those are working from the starting of the company and actually work very hard to make a brand image of that company. So it's just a kind of a gift. It's just a kind of a prize that company provide them sweat equity share at very concessional rate. So ABC Limited said that we will give 1,000 share to our some employees and their shares would be sweat equity share. The market value of these shares, suppose 200 rupees. But we will give these shares to our employee only for 40 rupees per share. Okay, we have actually gone through with multiple provisions till now. The salary part is going to be end soon. So after those perquisite, what we have gone through already, if I'll ask you, what exactly practically we are taxed in case of perquisite? The amount we got free from employer for our personal purpose, that is technically perquisite. Without even telling you the taxable value, how we need to find out in this case, are you able to understand what should be the taxable value? If market value was 200, employer provided us that share for only 40 rupees. So even without, I am not going to tell you the taxability provision. Are you able to understand that in this case, what should be the taxable value? Because we have already gone through with multiple perquisite cases. So it's a very common thing to understand right now. Nagaraj is saying situation 1, transfer mobile phone. What is that question, Nagaraja? Please ask in detail. Exactly. Whatever free you are getting, that is taxable value. So look how smart you are now. Now you are understanding the income tax. Even I am not actually explained the taxability provision, but you have gave the correct answer that 160 rupees should be the taxable value. Whatever you are receiving, that would be the taxable value. Exactly. That's the correct answer. 160 per share into 1,000 would be the taxable value in case of any security, any sweat equity share if received by an employee from an employer at concessional rate. That would be the taxable value. So congratulations, students. Now you are find out the answer your owns. Really impressed. Good. So these are the provisions which has been written over here. Kindly go through with them. Simple provisions. So all perquisite has been done. Now, if you have remember, in the chapter, in this chapter of salary, there was part 1. And if you have remember, in part 1, I have made an ideal format. In one, there was basic salary, advanced salary, area of salary, bonus, commission, taxable portion of all allowances, then compensations or profit in lieu of salary, then provident fund, and then perquisite. And after that, it has been written from 1 to 8 point. After calculating, this would be our gross salary. Remember? Out of that gross salary, there would be certain deductions we have to reduce. There were 3 deductions. So now we are on this part, the deductions part. So we have gone through with all the provision that how to calculate the gross salary. Now we are on is deduction topic. Now deduction, there are 3 deduction. First one is standard deduction, and this is allowed in both regime, whether you are in a default tax regime or you are under optional tax regime. Entertainment allowance deduction, this is only available under optional tax regime. And also one very important thing, this deduction is only for government employee if they are under optional tax regime. So if government employee is under default tax regime, not available. If you are under optional tax regime and you are a government employee, then only you can claim this entertainment allowance deduction. And the last one is professional tax deduction. Again, this is available only under optional tax regime. Now, what is standard deduction? The first one, which is available under both regime, that is gross salary or 50,000, whichever is lower, as deduction under optional tax regime. And this would be 75,000 or the gross salary, whichever is lower, as deduction under default tax regime. So how many of you is heard about it that in basic concept we have discussed up to 12 lakh rupees, there is no tax if you are under default tax regime, because there would be a rebate of 60,000. So you would not liable to pay any tax. And how many of you have listened this thing practically from your friend, your colleagues, or your parents, that now we do not need to pay any tax up to 12 lakhs 75,000. Did you hear this statement anywhere? The correct statement is we do not need to pay 12 lakh any tax on 12 lakh rupees under default tax regime. But I believe few of you at least have heard this statement also, that now there is no tax on 12 lakh 75,000 rupees. Now you understand why people say this? After listening about the standard deduction provision under default tax regime, now you are able to understand what is this. Nagaraj is asking, solution 1, transfer mobile phone. No, it will not include under the computer and electronic items. Mobile phone would be categorized in the third category, other asset, 10% SLM. Understood why people said there's no tax up to 12 lakh 75,000? Because those are only salaried person who is actually saying this statement. Why? Because even if their gross salary is 1275, they will get the benefit of 75,000 under salary head. So their total income would be 12 lakh rupees only if there is no other income. So no tax on it. So they are actually happy because according to them, there is no tax up to 12 lakh 75,000 salary income. When somebody say there is no tax on 12 lakh 75,000 income, that is wrong. Yes, but if that person say it's no tax on 12 lakh 75,000 salary income, then that statement could be true. So understood how people think the things are and what actually it is. Actually, there is only 12 lakh rupees rebate benefit. So 12 lakh rupees exemption. We'll see if there's any query. No query. Sure. So now these are entertainment allowance deduction, which would be available only to central and state government employees and only if they are under optional tax regime. So if you have received any entertainment allowance, suppose in the question, employee is receiving 5,000 rupees per month as entertainment allowance. So what is the treatment? This is going to be taxed as your taxable allowances. This is going to be taxed as your taxable allowances. In the format we have discussed, basic salary allowances. So 60,000 is going to be taxed as your taxable allowances over here. In this format, there would be taxability of 60,000. But you can claim a deduction later under point number 2 of deductions. This is entertainment allowance deduction, but it is only available to government employees. Minimum of these 3 points is going to be allowed as deduction. So that would reduce your taxability. Actual amount received 60,000. 20% of only basic salary. It's only basic salary. No advance, no arrear, no dearness allowance, no term. Only the word has been specifically written. Basic salary 20% we will take over here. And the maximum amount is 5,000 rupees. It's not per month. It's only 5,000. So lowest is going to be exempted and that could be allowed as a deduction from your gross salary. So the maximum deduction could be only 5,000 rupees. Now, professional tax, if any professional tax has been paid by employee, that is going to be reduced as a deduction. But if suppose your professional tax has been paid by employer, professional tax of yours, employee professional tax was suppose 1,000 rupees. And suppose it has been paid by employer. In that case, that 1,000 will become the part of perquisite initially and then it is allowed as deduction. Kindly read these provision also. So those were deduction, those was gross salary provision. We have just completed it. And now we will move on to the relief part. Relief under section 89. And after that, there would be that end game provision we were discussing about. So today we would be able to complete the relief provision and also, I believe, to understand the end game provision. Or we can do one thing, we will complete that end game provision first because relief is like taxability provision. But I'm thinking we should complete our salary topic completely. It's also a part of salary, but it is regarding a relief is just kind of a rebate, a kind of discount you can claim in case of salary if you are receiving arrear of salary or advance salary. So first of all, we have to complete our provident fund provision. That end game provision we are going to complete. So I believe you all are ready for it. So you need to focus to understand this topic as much as you can. And let me tell you, this is something I also believe it's difficult, not that easy to understand. And we have to solve it with the help of example also, because it would be only, as I always say, whenever there's a numerical provision, you would be able to understand only when you are solving it with a numerical. Only theoretical provision will not help you to understand those provision clearly. And so that's why we will read the concept, we will read the provision, and please do not worry about it, that why and what is happening. Until we complete our example, do not worry about it. So just stay with me. I will teach you each and everything, but this is the time you have to show and you have to focus 100% because this won't be easy to understand until you will apply your 100% brain over here. So this is a test for your IQ level, your smartness, your intelligence, your focus, your everything. So I believe you all are ready. Let me see the queries first. Then we will move on to this. Golti analyst saying, sir, what is the reason? Do not ask the reason because we are not able to answer why. What is the reason for this partiality in entertainment allowance are among private and government employees. It is the law we have to follow. There is reason for each and everything, but we cannot explain the law why it has been made. Okay. So let me see. You all are buckled up, ready? Sir, okay. 20% of basic salary means Nagarja, only basic salary. No dearness allowance, no perquisite, no area of salary. The first content, what we understood in the first part, that is basic salary. Only that needs to be taken. No DA, only basic salary which has been due during the year. The first point of the format, basic salary, only 20% of that we have to take. Any more query? No more query yet. Okay. Chalo. So let's get started. Now the provision says this provision we have to discuss and this provision. Amount or the aggregate of amount of any contribution made to the account of the assessee by employer in a recognized provident fund in NPS in a superannuation approved fund. So if any contribution made by employer in any of these funds, if it is exceeding 7,50,000 rupees in that particular previous year, the excess is going to be taxed. That's it. Not a problem. This is very simple. Actually, this is connected with this annual accretion to the balance. So if the contribution has been made more than 7,50,000 rupees, then the balance going to be taxed in this point. But on that, we have to calculate now this taxable value of perquisite. And I think this concept is so complex that I believe it has not been asked in the examination yet. But that yet does not mean that it is not going to be asked in future also. It has not been asked yet. It could be asked in your attempt. Maybe possible. So annual accretion to the balance at the credit of the recognized provident fund, NPS approved superannuation fund, which relates to the employer's contribution and include in total income on account of the same having exceeding 7,50,000 rupees. So this is what we are going to discuss. And if we are going to read that provision, whatever has been specified in the study material or in the act, that would be really difficult to understand that what exactly and how we need to calculate it. You will see with the language, this is the exact language which has been prescribed in the study mat. Annual accretion to the balance at the credit of the recognized provident fund NPS approved superannuation fund which relates to the employer contribution and including total income on account of the having exceeding 7,50,000. So this paragraph is saying that annual accretion taxability would be applicable only if the payment has been exceeding 7,50,000. Understood this first thing? That if payment is not exceeding 7,50,000, there would be no taxability of this annual accretion. Now, moving further. Any annual accretion by way of interest, dividend, or any other amount of similar nature during the previous year to the balance at the credit of the recognized provident fund or NPS or approved superannuation fund to the extent it relates to the employer contribution which is included in total income in any previous year, not our previous year, under section 17(2)(7 computed in prescribed manner under section 17(2)(7). 17(2)(7, if any contribution exceeding which has been prescribed under section 17(2)(7. 17(2)(7 is that provision that if it is exceeding 7,50,000. So it says it's not only our previous year. If in our previous year, the contribution has been exceeding 750, there would be taxability. But if that has been exceeding in any preceding previous year also, then also we have to calculate the taxable value which is related to that preceding previous year contribution in the prescribed manner. The prescribed manner is section 17 to 7A, which we are actually reading. So maybe you are not able to understand by these words. So they are saying, okay, understand in other words. Understand. In other words, interest, dividend, or any other amount of similar nature on the amount which is included in the total income under section 17 to 7 would also be treated as a perquisite. So they are saying if your contribution exceeding 7,50,000, so the excess has been treated as your income. So that is the income. Suppose the contribution is 8 lakh rupees, then 50,000 would be the part of your income. But upon that 50,000, we have to calculate interest, annual accretion. That is also going to be the part of the taxable perquisite. The CBDT wide rule number 3B notified the following manner to compute the annual accretion by way of interest, dividend, any other amount of similar nature during the previous year. So this was theoretical, which actually explain only two things. This whole paragraph, what we are reading over here or above. If I'll summarize, these paragraphs is only explaining two things. That taxable perquisite would be if contribution of employer exceeding 7,50,000, then that excess is going to be taxable. And on this taxability, we have to calculate the taxable value of interest, etc. for this previous year plus any other previous year as per rule number 3B, which is over here. So these above paragraph only just talk about what needs to be done. One provision is very simple, exceeding 750, difference is taxable. But on that exceeding of 750 of this year, and if anything has been exceeding in the preceding year also, we have to calculate the taxable value in this year in aggregate. Understood till now? If you have understood, then we will move on. And let me tell you, you would be able to understand how to solve the question once you will complete it. So that's why I have just made everything with a narration that what exactly we are going to do. So if you just read this paragraph from your study material, you might be confused that what is going to be happen. First of all, you should understand now what we are doing. So I have just explained in a very summary form that there are two things going to be happened. If contribution exceeding 750, difference is taxable. And whatever is going to be taxed when contribution exceeding 750, we have to calculate as per rule number 3B a certain amount of perquisite value also. And that perquisite value is our endgame provision. Till now, endgame did not start it. Now the endgame is starting. Let me see if there is any query. Harsh Mishra is saying, summarize once again, please. There are just 2 points needs to be summarized. Exceeding 750, difference needs to be taxed. And on that difference, we have to find out the perquisite taxable value as per rule number 3B. Is it not taxed in those previous year? No, it is taxed on those previous year, but we need to do the compounding taxability in this year. It's kind of interest which is compounding. So we have to tax in this year also. In the last year, it would have been taxed. So we have to compounding interest. So we have to find out the compounding taxable perquisite value. Okay, sir, this endgame Thanos is simple. You will come to know. Sir, employee contribution accretion is taxable regularly. Right, exactly. Every year you have to do it. Okay. But the preceding year, whatever has been taxed, you have to tax the compounding value of that also with the formula what we are going to understand. Adil Khan, just wait for it. You just please, as I've asked you, do not ask question right now because we did not even started yet. Just be patient, be with me, try to understand what we are discussing. You will be able to find out the taxable value. Okay. अभी start होने वाला है, अभी तो numbering चल रही है. Fine. Okay, so this is the formula, rule number 3B. And you have to find out this in the question. This is what we have to solve. This is our endgame equations. And it says TP is equal to PC oblique 2 multiplied by R plus PC plus 1 plus TP plus 1 multiplied by R. So these things we have to find out. Then we have to apply these things from our question. And then you will find out your taxable perquisite value. Everything has been mentioned. What is the meaning? Let me tell you. First of all, understand what exactly this formula is. Let's decode it. Fine. So this taxable perquisite under section 17 to 7A for the current previous year. So this is the taxable value we can say. So this is what we are searching for. Fine. So taxable perquisite under section 17 to 7A calculation we are doing in our current previous year. Now these components we have to understand what exactly these are. So we have to find what is PC, what is R, what is PC1, what is TP1, and R, of course, the same thing. So the PC according to the provisions are amount or aggregate of amounts of employer's contribution in excess of 7.5 lakh to recognize Provident Fund, National Pension Scheme under Section 80 CCD and the approved superannuation fund during the previous year. So PC is technically the contribution made by employer in current previous year, which is exceeding 7.5 lakhs. So I have just made all those things easy for you because this has been written in the act as well as in your study material. I have decoded all these points in the simple language to make you understand that how to solve that question. When example is there, if you understand these points, whatever I have made in blue, you would be able to find out the components and you would be able to put those components easily in that formula. So without these provision, if you only try to understand the concept with these concept or the language which has been specified, I believe that would be really complicated. Still, it would be complicated, but due to the help of these points which I have been made for you, you would be able to find out the component what we need for the purpose of calculation. So now you see whatever you have read in this point, paragraph. Now forget about it. We just need to find out this thing. Employer contribution to fund more than 7,50,000 in current previous year. Now you're feeling relaxed. That was an end game, but we have the power to decode it also. So suppose in the question it has been written 8 lakh is the contribution. So what is PC? PC is only 50,000. Understood? If the contribution is 7 lakh, PC not applicable, 0. Got it? So able to find out the meaning of PC? Now PC1. Now if you will not read this, then you will see what is this language is saying. Amount or aggregate of amounts of employers' contribution in excess of 7.5 lakh to recognize Provident Fund, NPS, Superannuation Fund for the previous year or years commencing on or after 1st April 2020 other than the current previous year. Understood the language? Now it's saying leave this current year excess amount and now take the all preceding year excess amount from starting from 1st April 2020. So in short, now they are saying aggregate of all preceding previous year employer contribution to fund exceeding 7,50,000 if any. Matlab from previous year 2020 till 31st March 25. So from April 2020 till 31st March 2025, the old contribution of your employer in the year in which it has been exceeding 7,50,000, the aggregate of that you have to mention in PC1. That means in examination, this information has to be there in the question. We have to extract these information. So these blue quotations or sentence, whatever I have been prescribed for you, you have to extract these things from the question first. Then put those things in the formula. You will be able to get the answer. Generally, I recommend student in every case that please be logical to understand any provision. In this case also I am saying be logical, but I believe to decode this question in the examination, it's more important that be logical and please find out these blue things in the question, extract these and you will be able to solve the question. Better than be logical. You should be logical as well as be smart to solve this question. So this second point was PC1. Now TP1. What we are searching? We are searching TP in the question. And the formula one thing is TP1. Now what TP1 is saying, in the preceding years, if this perquisite has been taxed, now you have to calculate that taxable value of preceding year with this formula, and then that taxable value also going to be added in this year. As the last year contribution we are adding, in the same way, this perquisite you must have been calculated in preceding year. So find out the taxable value of this perquisite from preceding year and whatever that TP of that preceding year. Suppose we are finding TP for previous year 25-26. So what is TP1? TP1 would be previous year 24-25 TP value. So that is TP value for 24-25. But for my year, it would be regarded as TP1. मजा आ रहा है मतलब enjoying कमाल का provision है कमाल. It is absolutely amazing provision. I believe this is super amazing. Aggregate of taxable perquisite under section 17 to 7A for the previous year. And believe me, this is complicated. I know that. But let me solve the numerical with you. And after that, you will feel, okay, I am able to solve that question. And that's only what matters. So just try to read the provision, understand them, but for the purpose of solving, these things will really help in every case, in every question. So aggregate taxable value of perquisite under section 17 to 7A. Now what we are discussing, we are actually finding this for our previous year. And TP1 is saying this value must have been found out in the preceding year also. You need to find out the aggregate of it. Not only the preceding year, the aggregate of all year would be my TP1 for the previous year or years commencing on or after 1st April 2020. Now somebody could ask, sir, why this is 1st April 2020? Why this date? So because this provision has been applied from this date. Before that date, there was no such provision was there. Okay. So 1st April 2020, other than the current previous year, because current previous year value though we are finding. So how can we take the current previous year value as per rule number 3B? So technically we need to aggregate the preceding year TP values that would be regarded as TP1 for our preceding year, our previous year. Aggregate of all preceding previous year taxable value if this perquisite, if any, from previous year 2025. So when you will read these blue sentences, you will feel all is well, all is well. Okay. Abhi, it's not yet done. Now the component, the formula also is having one thing that is called R. You can see what we are finding out. We were finding out TP. PC, we came to know what is PC. PC1 we know. What is PC1? What is TP1 we have discussed. Now the last thing is R. Now R is a formula, a value. R is I upon FAVG. I upon F average. If you want to understand exactly how we should call it, we should be I upon F average. F average means fund average. So first of all, we have to see what is the meaning of I. Now, how do we need to calculate the I, or how we would be able to calculate the I? Let me show you. The theoretical provision, this is only written in the study. Amount or aggregate of amount of income accrued during the current previous year in recognized provident fund, national pension scheme and approved superannuation fund. They are just written this. Now it's your responsibility, find it out what exactly they are explaining. The act is saying amount or aggregate of amounts of income accrued during the current previous year in the recognized provident fund. And how we do need to find the value, I am here to help you, do not worry. So format for previous year 25-26. So if you need to find out I for previous year 25-26, balance of the fund value on 31st March 26 we have to take in. That would be given in the question. Our provident fund balance value on 31st March 26. So we can say the closing value of the fund that would be given in the question. Deduction we need to done employee contribution during previous year. This year, how much employee contribute, you need to reduce it from the closing balance of fund. Then you have to reduce employer contribution during current year of the firm. So employee contribution need to be reduced, employer contribution need to be reduced, and fund balance on 1st April 25, that also need to be reduced. So this is my I. So this is closing balance of fund. This is opening balance of my fund. This is employee contribution, sorry, employer contribution. This is employee contribution. So what is rest is what? Rest is income. That's what exactly they were asking. Income. Suppose the opening balance of fund is 50 lakh rupees. The closing balance, the employee contribution or employer contribution, suppose 8 lakh contribution by employee, 8 lakh contribution by employer. So how much it is? It is 66 lakh. And suppose the fund balances, the closing fund balances is given 69 lakh. So what exactly we are finding out? The income which generate in the firm. 3 lakh rupees is the income. If it's just like a opening stock, closing stock, purchase and sale, the difference is your GP. So technically what we are discussing, we need to find out the gross profit as we find out in the business case. Opening stock, closing stock, sale and purchase. So technically we are just finding out the income part, and for finding that income part, the closing balance that would be given in the question. Employee contribution, employer contribution would be in the question, and opening balance also in the question. So the balance is I. This is called income for that preceding year. This is for previous year 25-26. Suppose if it is for 24-25, you need to find it out. Then we will take the 31st March 25 opening balance, 31st March balance, employee contribution for 24-25, employer contribution for 24-25, and opening balance that would be 1st April 2024. This is my opening. This would be my closing. So this is for our previous year. In the example, in the exam also, you maybe need to find out the value for the last year also. So in that case, of course, the value would be changed. The preceding year value, if need to be asked, then 31st March 25 value we have to take in as closing. Opening would be 1st April 24 and employer contribution. Then F average. This is F average. Read it. Amount or aggregate of amount of balance to the credit of recognized provident fund, national pension scheme, 80 CCD and approved superannuation fund, first day of the current previous year, amount or aggregate of amount or balance to the credit of recognized provident fund, Approved superannuation fund last day of the current previous year. This was the paragraph. Do not worry. This is the solution. Format for 24-25. Total fund balance as on 1st April 25 and fund balance on 31st March 26 divided by 2. So we are finding average of fund balance. That's why the name is F average. Funds average. And if you will see this format, technically what do we need to take? This value and opening and closing value divided by 2. Like if I need to find out F average in this example, then that means 69 plus 50 divided by 2 is my F average. So what theory is trying to make you understand? The act provision, you will find out very difficult what exactly they are saying, but you will see if you are able to find out the I, you are able to find out the F average very easily, because from I we have to take the opening and closing divide by 2. That would be my F average. And then I upon F average, that is R. The very, very main important of any solution of this percolate would be the R. Correct? Example of this we will discuss from your study material, illustration number 10. So let me see what happened in the chat box. It is difficult. Do not worry. That's why it is important. Yes, 50K, 50K. We see current previous year means current previous year is 25-26. Okay. All preceding year. What about SPF and URPF? How others RF also be calculated? In this, only we have to take Provident Fund recognized national, because SPF, PPF is for other than employees, not included in this case. Golti and Ilsa, those made easy. Exactly. Look, this is difficult, I know. That's why I have, from the point of view of students, I have made these blue sentences so you would be able to find out the value from the numerical. So in the examination, it's very important to solve the question first. So you will understand the logic behind it. But what the benefit if you are not able to solve that question in examination? So I have provide logical also, and for the solution purpose, please use these blue smart things to find out the solution. Next is all TP for proceeding. Shraddha is saying head spinning. It would be fine, don't worry. So it happened with COVID, that's why it's so complicated. No, it's nothing with COVID with this case. All is well. Good. Means cost formula like found out production. Yes, exactly. Opening, closing. Neeraj Kumar, sorry, Endgame 85-90% समझ आ गया. Really? You really think so? You have understood right? It's now. No. When you will see the numerical example. Abhi we just gone through with the provision and you will say, okay, we will find it out, write this. No, the calculation is also complicated. So stay with me. After the example, we will ask how much endgame you are able to understand. Sir, also please explain the formula, derivation like components we understood. Yes, we will discuss the formula. No? When we will saw the solution numerical, we will discuss that formula also. First of all, I need to explain the what is the meaning of each components. I could just told all of you that, okay, this is the formula, you have to read it yourself and you will solve question yourself. But no, that would not be the correct thing until unless you would be able to find out the solution which exactly should be. Of course, that's a break time, Saipa. I also need that break. So after the break, we are going to solve that illustration number 10. So be prepared, have your tea, coffee or whatever, boost, Horlicks, badam, जो भी खाना है खा लो बच्चों. I'll be back. So Mr. Nisar, can we have a short break? Nisar ji, can we have a short break? Nisar ji, can we have a short break? Okay. Welcome back, everyone. And I believe you must have taken tea, coffee, boost, Horlicks, badam, almonds, walnuts, everything because we need it. And actually, even I need it, I guess. So Mustafa is saying TP is equal to previous year contribution exceeding 7.5 lakh oblique 2 multiplied by R, that is income upon average funds plus all aggregate contribution from 2020 till 25. That should be all aggregate contribution exceeding 7.5 lakh from 2020 till 25. All aggregate taxable perquisite 2020 till 25 multiplied by R. So yes, almost correct. But now we will see how to apply implementation of this formula. So even I believe you all must understood the meaning of now PC, PC1, TP1, R, I, and F average. So technically PC is employer contribution exceeding 715 current year. PC1 is aggregate of employer contribution exceeding 7,50,000 for all preceding previous year from 2020 till 25. TP1 is the taxable value of perquisite in the same way as we are calculating in this year. So that must have been calculated in the preceding year also if in that year the contribution exceeding. So that would be the TP1 value. Then R is income of current year and F average is average of opening and closing funds of the current year. If we are able to find out all these value, then maybe we are able to find out the taxable value of our perquisite. So for that, now we have to see that how it's going to be calculated with the help of the illustration. Illustration number 10 is the illustration what we are going to discuss. That would be on page number 3.58. So we are going on page number 3.58. And before solving it, first of all, we will read it. So these are the provision. You can see this was the perquisite which has been in your study material. So I have just added the sentences, you can say summary of each paragraph. So you would be able to find out the value which is required to solve that perquisite in the examination. So now the example is over here and you can see what are the informations actually in there. Mr. X is appointed as a CFO of AVC Limited in Mumbai from 1st September 2023. His basic salary is 6 lakh rupees per month. He is paid 8% as DA. He contributes 10% of his pay and DA towards the recognized Provident Fund. And the company contribute the same amount. The accumulated balance in recognized Provident Fund as on 1st April 24, 25 and 26. So these fund balances has been given in the question to calculate that F average. We are having the balance on 1st April 24, 31st March 25 and 31st March 26. Compute the perquisite value chargeable to tax in the hands of Mr. X under section 17 to 2 and 17 to 7A, 17 to 7 and 17 to 7A for 2 assessment year. This is the problem. Now the all calculation needs to be done for twice at least for assessment year 25-26 and assessment year 26-27. And you can see this information also given prior to 1 September 23. He was a consultant whose professional fees was taxable under the head PGBP. So technically the question is explaining you that before 1st September 23, there was no salary income, so no provident fund calculation required. Now, if you will see, then from 1st September 23, till 31st March 24. That is assessment year 24-25. Then he was working from 1st April 24 till 31st March 25, and then from 1st April 25 till 31st March 26. So why this information has been there? Because they just do not want to calculate you the PC1 of all preceding previous year. If the question says that he is in working from 1st April 2020, then you have to find it out PC1 for every year. Then you will be able to solve the question for this duration. So that's why they intentionally provide you this information. Then if you'll see in this year 24-25, we have to calculate all preceding previous year PC1 to find out the taxability for our PC. So to calculate the PC taxable value, we have that PC1 of all the preceding previous year. And for that, the TP1 we needs to calculate for all preceding previous year. So because we have to calculate TP for our this year, so we should have the TP1, that means aggregate of all taxable perquisite preceding to this year. So that one, we have to calculate TP of that year. This TP would be the TP1. And we have to add the preceding year also. So suppose there are 3 or 4 years preceding to this year's salary information. Then for each year we have to calculate the TP. Then only we would be able to solve the TP for our preceding previous year 25-26. So that's why they intentionally give this information that before 1st September 23, he was not in job. And from 1st September 23 till 31st March 24, September, October, November, December, January, February, March, only 7 months he was in job. And the salary was 6 lakh rupees per month. And 8% of his 48,000. So technically salary is 6 lakh 48,000. And for 7 months salary would be 4,536,000 and the contribution is 10%. That means not more than 7,50,000. So in this year, there would not be any TP calculation because it's less than 7.5 lakh. So that's why this information has been given that before 2023 September, there was no salary income, and from September 23 till 24, if you calculate, there is no TP applicability. So that's why we have to calculate only 2 years TP provision, because for calculating TP for 26-27, all preceding year TP we have to calculate. And this would be applicable only for 24-25, not applicable for 23-24. So that's why the question has been asked that you have to calculate the value of taxable perquisite for 2 years, 25-26 and 26-27. In the exam also, they will not ask to calculate you more than 2 years, because that would be very, very complicated and long calculation would be there. In my opinion, in examination, maybe they will ask you to calculate only current year TP value. And TP1 value would be given in the examination. I believe that, but there could be possibility that you have to calculate the TP1 yourself. Galti Anil saying, R is simple, sir, actual income from entire contribution during current year and fund average opening plus closing divided by 2. Yeah, it's simple, but if you'll go through with only the theoretical part without that sentence I have added on, then maybe initially you could find it difficult, but because the hint will definitely going to help you. Sir, he hinted TQ for him, no previous year per section 17-7. Yes, correct. चलो अब solve करते हैं इसको. So first of all, we are solving it for assessment year 25-26. That means previous year 24, 25, because until we will find out the TP1, this would be my TP1 for my assessment year 26-27. So for the calculation of 26-27 TP, I need TP1. So for TP1, we have to calculate that perquisite value first in the assessment year 25-26. So what is the formula? Formula we have already seen. And before that formula, we have to see whether the applicability is there or not. And you can see the applicability is there because the salary is 6 lakh plus 48,000 is a DA. So technically the total payment is 6 lakh 48,000 into 12. So total value would be my salary 77 lakh 76,000. And 10% contribution has been made. So 7 lakh 77,600, which is exceeding 7.5 lakh. If it is not exceeding 7.5 lakh, there is no applicability of these provision. But because it is exceeding, so that's why we have to calculate TP. So point number 1 is explaining you perquisite value in a section 17 to 7. 27,600 is going to be taxed under section 17 to 7 because it's exceeding 7,50,000. And how much is going to be exceeding? That's going to be my taxable value. So one taxable value we have find it out in point number 1 under section 17 to 7. Now the main perk value that is under section 17 to 7A, which is our TP, we are going to calculate with the help of the formula. Now we are moving on to that. 17 to 7A would be applicable only when 17 to 7 is applicable. In previous year, we have seen in this previous year, 23-24, because 17 to 7 not applicable. That's why no need to calculate 17 to 7A. So the 17 to 7A is connected with your 17 to 7. Understood? Chalo. Now we have the formula. We have to solve the TP, and for the purpose of TP value, we have to find out the PC divided by 2, the R, the PC1 and TP1. So can you tell me what should be the PC1? If I'm not going to show you that, can you tell me what should be the PC1 and TP1 in this assessment year 25-26? PC1 and TP1 is the preceding year. Section 17 to 7 value and 17 to 7A value. So when we are calculating this perquisite value for assessment year 25-26, then you can see in the preceding year, 24-25 assessment year, there was no taxability. This provision was not applicable. So PC1 and TP1 in this year would be 0. You can see we have taken this 0. Why this is 0? Because in assessment year 2024-21, this provision was not applicable as contribution does not exceed 7.5 lakh. So this part you understood? Now we have to find it out PC/2 into R. Now PC stands for my contribution, which is in excess of 7.5 lakh, which we have calculated under point number 1. So whatever the value under point number 1 would be automatically my PC in solution of my TP. So the excess amount, which is excess of 7,50,000, would be automatically become my PC. That would be 27,600. So you can see we have calculated that this is my PC for the purpose of formula, which has been taxed in point number 1, which is taxed over here. That would become my PC in my solution of calculation of TP. 2, it's a normal thing. So 27,000 divided by 2 would be the value we have. Now the main thing is R. PC is this, the contribution in excess of 7.5 lakh to recognize Provident Fund 24-25 is 27,600. PC1 nil. Why it's nil? Because in the preceding previous year, the contribution is not exceeding that 7.5 lakh. So PC1 is automatically nil, and that's why TP is also nil. Now I have to calculate the R, and R is income oblique F average. Now, for the purpose of income calculation, because we are discussing previous year provision, we are discussing previous year 25-26. That means assessment year 25-26 means previous year 24-25. So for that purpose, for calculation of I have to take the value on closing fund balance. Closing fund balance, that means the value on 31st March 25 plus, not plus, minus employee contribution, minus employer contribution, and the value which would have been on 1st April 2024 we required. So now can you tell me these four values? Chalo, tell me from these information the value on 31st March 25. Find it out. Employee contribution, tell me how much. Employer contribution, tell me how much. And the value on 1st April 2024 of the fund. If you are able to find out these four values, technically we are able to find the I and F average also. Because for F average, we need to take these two values divided by 2. So now tell me what should be the first value, 31st March 25 value. What should be I taken from these information? Let me see. Neeraj is saying, Sarji, you were freeze. Achha. Now it's fine. Okay, so on 31st March 25 value that would be given in the question, and that is Anil is saying 2743, Atitya is saying 27430, Mustafa is also gave the correct answer. Harsh is saying 4648 is the value on 31st March 26. This. And I am asking you to find out the value on 31st March 25. So that would be 2743048. Understood, student? This value would be, I am writing over here, 2743048. Fine. Now what should be the employee contribution, employer contribution, and the fund value as on 1st April 2024? So the fund value on 1st April 2024 also given in question, that would be 981137. Now what should be the employee contribution and employer contribution for the year? Tell me what should be the employee contribution and employer contribution. So how much we contribute in that fund, employee and employer, because the question says 10% contribution and the both employee and the company paid the same contribution. So that would be same 7,77,600, 7,77,600. So what would be the remaining value? Remaining would be my income, and that would be 206,711. Check everyone has able to calculate this I 206,711. For the purpose of R, we have to find out the I and F average. So that's how we find out the I. Now, can you find out F average from the information given above? What we need to take? This value and this value, opening and closing value of fund divided by 2. Opening plus closing divided by 2. So that would be my F. And that F average value would be 186,209,2.5. Pure mathematics. Pure mathematics. So I have calculated I, that is my income, and then fund average I have calculated. That is 18,62,092 rupees 50 paisa. Now for the purpose of calculation of R, what is the formula? The formula is I upon F average. So if we apply that, you can see R is I upon F average, that would be 0.111. Here is the provision explained how I has been right, how F has been right. Okay. Then we have to put this value in our formula, that was PC oblique 2 into R. So if you solve it, then the taxable value would be only 1532 rupees. 1532 rupees. Any problem, students? This is for assessment year 25-26. So for 25-26, we have taken the PC, which was exceeding the value. F average Nagaraj, we have calculated. F average means opening value of the fund plus closing value of the fund divided by 2. So in this example, we have discussed the opening value of the fund was 981137 and the closing value is 27,430,48. So opening value plus closing divided by 2. You can see this over here also. F average. The opening value of the fund, closing value divided by 2, that would be your F average. If this question is entire for 50 marks, I will not solving this and do this. Okay. Navneet, I have taken 0.111 because due to fraction method, we have to take 3 digits. So 0.01, if you will convert it, it would be 0.111. Correct. Very good. 15 marks तो मिल जाएंगे इसके. Harivansh, no sir, I did not understand this in last night. Now clear. Very good. So student, this is clear how we drive 1532 value, matlab taxable perquisite value of this year, assessment year 25-26, we have derived. But it's not yet completed. If you are thinking this is easy or you have understood everything, it's not done yet. After that, we have to calculate the interest on the following also. And the interest rate, because in question has not been given. So if it has been given, we have to calculate the interest also. And I believe that would not be given in the numerical also because already the calculation is too much for you. Interest on the aggregate of following will also be chargeable to tax during assessment year 25-26. On 2,03,600. Employee contribution, because it's exceeding 2,50,000. Remember the provision of 2,50,000 in part 1. If your contribution exceeding 2,50,000, 750 is part 2 provision. If you'll go and read the provision of RPF, PPF, SPF, there was provision if the contribution exceeding 2,50,000, then this is going to be taxed. The interest is also going to be taxed. For that purpose, interest information should be there. So on 2,03,600, preceding year 23-24, X is on 250. Interest on that is going to be taxed. Excess of previous year 24-25 exceeding 2,50,000 because our contribution is 777,600. This year it was less than that. So the excess of 2,50,000 on which you have to pay interest also. Interest accrued on 2,03,600 being excess employees contribution of previous year 23 and 24 also. So you have to calculate this also. Because employee contribution limit, you have to find it out and you have to charge interest on those limit also. So interest on these two limit for previous year 23-24 and interest on this value you have to calculate. You'll read it And please go through with the provident provision of last chapter, part 1 salary also. You will understand how to calculate it. Interest rate would be there. If there would be interest rate, we are going to calculate interest value on this also. Now this TP value we have to calculate for assessment year 26-27 also. Again for 26-27, the 17 to 7 perk value would remain same, 27,600. And now for the purpose of calculation of 17 to 7A, we have to find out the value as per the formula. And now you'll see, we have the complete value for each and everything which has been given in this question. We have PC value 27,600. 2 value would be there. We have to find out the R for this year separately. Now this is my preceding year PC value. Preceding year PC value, that is my PC1. You can see this is PC1. And TP1 is the preceding year taxable value which we calculated before this solution of assessment year 26-27. 1532 was the TP1 value. And this also needs to be multiplied by my R. So for the purpose of R of this year, I need to find out the I. For the purpose of I, the fund balance on 31st March 26, I have to take reduce employee contribution of this year, reduce employer contribution of this year, reduce on 1st April 2025 fund balance. You will get your I. Same as we have calculated in assessment year 25-26. What would be F average? Opening balance of this year and closing balance of this year divided by 2 would be my F average. By multiplying, we will find out this 0.09479 value. And after that, my perk value for this year would be 4069. So all calculation has been given over here. You can see the PC, the PC1, the TP1. RPF balance, the fund balance, reduce employee contribution, employer contribution, and opening. This is opening for this year. This is closing for this year. And this plus this divide by 2 would be my F average. Again, same note. Interest needs to be charged on the following. 23-24, 2,03,000 rupees contribution, which is in excess of employees contribution, excess of 250. Interest need to be taxed. Only interest needs to be taxed on this. On 5,27,600, the preceding year, interest need to be charged. On 5,27,600, this year interest needs to be charged. Interest accrued on 2,03,600, interest needs to be charged. And interest accrued on current year employees contribution, interest needs to be charged. So that is not important for examination point of view. If the information has been given, we will calculate it. The main thing is to calculate the PC1 and PC. So that was the end game provision. And I believe that it is complicated. It will take time. If you read one or twice, you will be able to understand how we should drive that formula and how we should find out the value which is going to be taxed for current year. Adil is saying TP of this year will be TP1 for next year. Absolutely correct. PC of this year would be the PC1 for the next year. So could you please elaborate how it is mixing up pattern of tax? Sir, like I got it how to compute, but what's the logic, sir? We cannot discuss the logic behind this because that has been driven by the lawmakers. So we just need to follow the rule. Like if you will see what is the logic behind taking 10% for rent-free house. Why we are taking 10% of salary for rent-free house? Why it is 7.5%? And let me tell you, earlier the limit was 5%, 7.5, 10 and 15% in case of rent-free house sort of. So the limit has been changed now. So this is the logic behind is to finding out is which is done by the lawmaker. is not possible to explain over here. Shraddha is asking, sir, how do we know whether to take 250 or 750? For the calculation of this perquisite PC, we have to take 7,50,000 because that is the provision we are discussing for TP1, TP2, etc. But for calculation of interest, we have to take the 2,50,000. So this 2,50,000 is not the provision what we are discussing. Let me show you from where this 2,50,000 has been arrived. This is infinity war provision, not the provision of endgame. Let me show you, student. Mustafa is asking how they got this amount 2,03,600 and 527. Interest part, let me explain you. Just a second. Look, first of all, focus on this thing. Are you able to calculate that TP provision or not? First of all, be sure about it that yes, I am able to find out that TP provision. If you are able to find out section 17 to 7 and 7A concept, first of all, you have to be sure about it that yes, this provision is clear, how to calculate TP, etc. Then we will discuss about that 2,50,000 concept, what it is, how it has been framed, from where it is coming. So that's what I am going to show you, but please do not mix both of them. They both are separate. It is like that. The provident and provision we have discussed in part 1. These were the types of provident and provision we were discussing, and I believe you forgot about these provision. These were the provision of 2,50,000. That does not have any correlation with the provision of section 17 to 7 and 17 to 7A. They both are different. That is the separate taxability, but the provision was here, and they were saying CBDT wide rule number 19 notified calculate taxable interest. If your contribution is exceeding 2,50,000, now they both are different provision. The interest calculation, what we were seeing in the example, is related to these point. They does not have any correlation with the TP provision. The TP concept is different. Now, if the contribution made by employer and employee is more than 2,50,000, then on excess of that, we have to charge interest. And that interest would be your taxable value. The interest would be a taxable value. So for that purpose, the interest rate would be given in the question. And then we have to see how much is going to be taxed or not. So this concept was there. So this provision does not have anything to do with all this calculation what we have made. Nothing to do with this calculation. The provision I have just shown you is connected with these point. So you can refer page number part 1 of salary. That was page number 34. That was page number, no, 34, 24. So with that is connected with page number 24 provision, students. So do not correlate with any of this. So that was page number 24 provision they are talking about, and it does not have any effect on the calculation of TP. Now what they are saying, let me show you what exactly they are trying to explain you in these notes. Let me show you on this board. You will see the provision in part 1, page number 24. Was this: if the employee or employer contribution exceeding 2,50,000, then interest is going to be taxable. Now in this example, if you'll see in assessment year 25-26, there would be a contribution was 777,600, the employer contribution, which is in excess of 250. Now, this provision does not have any connection with the TP provision. And because it is exceeding, so that's why on the axis, you can see the axis is 5,27,600, on which interest need to be taxed also. And this is contribution of assessment year 25-26. But because in assessment year 24-25 also, he was there, he was doing the job. So technically you will see for previous year 23-24, which is assessment year 24, like previous year 23-24, the salary contribution was 4,53,600, and which is in excess of 250. So technically the excess contribution would be 2,03,600, and that is a contribution of previous year 23-24. Now understand this like this. This contribution will also be there in our assessment year 25-26. So I will get interest on this value also, 2,03,600, which has been contributed in previous year 23-24 initially. So on 23-24 contribution, we have to calculate the interest, and this contribution will remain in every year. You will get interest on it. Like if in bank you make a FDR of 2 lakh rupees. Suppose in a bank, if you have made an FDR of 2 lakh rupees, in the first year you will get the interest, and in second year also you will get interest. In every year on that 2 lakh, you will get the interest accrued. In the same way, when the contribution is exceeding 2,03,600, every year he or she will get interest on it. So the contribution of 2,03,000, suppose this is an FDR, and he made this FDR in 23-24. So he will get the interest on that FDR in 23-24, and also he will get the interest in employee contribution, taxable, and interest also on that. So in this year, there will be taxability of two things. One is contribution taxability. The contribution of this year is 5,27,600 is taxable. The second taxability is contribution, which has been made 2,03,600. 250, and the interest part also. So three things are going to be taxed. The last year contribution, interest on this. These three things are going to be taxed because the contribution will remain every year. In the same way, when you will be in assessment year 26-27, you will get all these taxability again, because like an FDR, the amount is already invested, and accordingly, now you will see what we will have. All these three things we will again have. The 2,03,000 employee contribution, this is going to be taxed. The second is employer contribution 5,27,600. That is going to be taxed. Then again the contribution, interest on these things we have to tax. 527, again 5,27,600 interest taxability, and the interest accrued on the earlier payment also. So there would be taxability of interest on current year contribution, and the interest which have been earned. On that interest also, the interest again would be accrued. So do one thing, just read these provisions separately. Do not mix these provision with the TP provision. So today is the time you should go through with this provision. If there would be any problem in this concept of interest taxability, that we will discuss later. Because what is happening right now, because we have just go through with these provision, these difficult provision of calculation. So your brain is actually mixing those provision with the provision of interest which has been given separately in the solution. Do not mix it up. Today is the task. Kindly listen to me. Today is the task to understand these provision. After the class, just understand the calculation of TP provision. The separate part which is taxable, that is actually making you confused, just forget about it. I will separately make you understand that provision with the example in the next session. If you try to mix it today, maybe you are not able to understand this TP provision, you will forget. So focus on TP provision, that separate clarification part I will let you explain in the next class. Understood? So kindly note down the illustration for your homework. So the way of understanding what we were focused today was the TP provision. It's too complicated to understand. So if that has been clear, today's task is done. The balance part of that clarification, taxability, do not mix it up. Okay, we will discuss it in detail in the next class. But it is not even asked once in exam, I think. So I hope not later also. After our exam, it will ask. So I don't have any problem. Okay. 9D is different and rule number 3B is different. So we have discussed today rule number 3B, the calculation of TP. Just forget about the 9D. We will discuss it later in the next class. That is not relevant also for the purpose because interest would be given in the question. The solution just said that you have to taxable that interest, but the interest value would be given in the question. You would not be asked to calculate the interest on it. That would be compounding interest. How you would be able to calculate that interest and then taxable part in the examination. That's when the solution they have just mentioned that this interest needs to be taxed. Navneet is saying employer employee दोनों के मिला के 250 लेंगे. No, separately. If employer employee both contribute, then 250, and if only employee contribution there, then the 5 lakh limit was there. Yes, Galti, there are no correlation, and because you are just trying to correlate it, that's why students are confusing. So just skip that. It's just like you are trying to on the TV with the remote of an air condition. You think TV is going to be on by a remote, so you have to use the remote of TV. So for today, just do not think about rule number 90. Just be focused on rule number 3 provision, what we have discussed today. 3B is important for us. Story time, of course, there will be. Okay. So please write it down the first of all homework. Illustration number ultra pro complicated. That's why I told you, na, that is Endgame. But again, those who are thinking that TP provision is difficult, just do one thing, revise the provision, solve that illustration number 10 again. Do not consider that interest taxability part, which is rule number 90. Just focus on 3B, solve it again, and let me tell you in the next class, you will be saying that, sir, it is not that difficult. Only employee contribution, then exactly we have to take the limit of 5 lakh rupees. Absolutely correct. So students, the illustration, you have to try illustration number 20. Now you can try it because in that illustration, there was some part of transfer of movable assets. So I have said that I will solve it, but now you can try yourself because we have discussed all the provision of salary till now. Illustration 20, illustration 22, illustration 23, 24, and 25. So you have to do illustration 20 and then illustration number 22 till illustration number 25. In the next class, as I've told you, I requested you all, please revise all the salary topics because we have to solve multiple questions related to MTP, RTP, previous year questions. So that would be easy to all of you to understand what exactly we are going through. So now, as I have told you, a very small and very motivating story from Alba Edison, I am going to tell you. As in the starting thought for the day, there was a very good thought regarding the positivity. So I'm going to tell you the power of positivity, and that's a true story. Mustafa saying, sir, I first thought that I will be do GST for 20 marks and do DT now. After just seeing salary, I have to change approach and do GST. Okay. Galti Singh, sir, you explained very well. Thank you so much. स्टोरी क्या थी? जो एडिसन थे व्हेन ही वाज इन स्कूल, तो स्कूल में पढ़ते थे और काफी क्यूरियस थे, अपने टीचर से बहुत सारे क्वेश्चंस भी पूछते थे। तो एक दिन उनके स्कूल्स के टीचर ने उनको एक एनवलप दिया, उसमें एक लेटर था और वो बोला कि अपने मम्मी को जाकर देना, घर पे अपनी मदर को। वो घर पे आए, छोटे थे, उन्होंने अपनी मम्मी को बोला कि मेरे टीचर्स ने मुझे ये एक एनवलप दिया है, इसमें एक लेटर है, उन्होंने कहा है कि आपको देने के लिए। एंड उनकी मदर ने जब वो लेटर पढ़ा एंड शी स्टार्ट क्राइंग, तो उन्होंने पूछा एडिसन ने कि क्या हुआ, तो उन्होंने बोला कि स्कूल से लेटर ये आया है कि आपका बच्चा बहुत ज्यादा इंटेलिजेंट है और वो हमसे ऐसे ऐसे क्वेश्चन पूछता है जो हमारे पास भी आंसर नहीं। तो इसको किसी बेटर स्कूल की जरूरत है, बेटर टीचर्स की। हम शायद इसकी टैलेंट को संभाल नहीं सकते, तो आप या तो खुद पढ़ाइए या फिर किसी दूसरे स्कूल में उसका एडमिशन कराइए। तो उनकी मदर ने कहा कि अब मैं तुम्हें खुद पढ़ाऊंगी। एंड उनकी मदर ने उन्हें पढ़ाना शुरू किया, उनको नॉलेज देना शुरू किया। एंड जब वो एक बड़े साइंटिस्ट बन गए, तब एक दिन उनकी मदर की डेथ हुई और उन्हें वो एनवलप मिला अपने एक बॉक्स में रखा हुआ। और उस लेटर में एग्जैक्टली ये लिखा था, स्कूल से जब वो आया था, कि आपका बेटा बहुत बेवकूफ है, ये हमसे बिल्कुल फालतू सवाल पूछता है और हम अपने स्कूल से इसे निकाल रहे हैं, आप इसको स्कूल ना भेजें और खुद पढ़ाएं। देन व्हाट हैपन, यू नो द पावर ऑफ पॉजिटिविटी। अगर उनकी मदर ने उन्हें ये बात बोली होती जब वो छोटे थे, तो ही माइट फील डिप्रेस्ड। उनको ऐसा लगता कि मैं इतना बेवकूफ हूं, स्कूल ने मुझे निकाल दिया। एंड मे बी वो शायद उतने बड़े साइंटिस्ट नहीं बन पाते। बट उनकी मदर ने उन्हें पॉजिटिव बात बताई कि आप बहुत होशियार हो, इसीलिए आपको स्कूल से निकाला गया। एंड दीज वर्ड्स एक्चुअली इम्पैक्ट द लाइफ ऑफ दैट चाइल्ड एंड ही बिकेम सो फेमस, सो बिग साइंटिस्ट। So these are the power of words. Be there, be always positive. And if कैसे लोग आपके पास हैं जो आपको नेगेटिव बातें करते हैं कि आपसे नहीं हो पाएगा, स्टे अवे फ्रॉम them. बिकॉज इफ ऐसे लोग आपके पास होंगे जो आपको हमेशा मोटिवेट करेंगे, आपको पॉजिटिव वाली बातें बोलेंगे, तो डेफिनेटली दैट इज गोइंग टू अफेक्ट योर लाइफ इन अ बेटर वे. So that was a story for you regarding the positivity. Mustafa is saying, thank you so much, sir. Had fun with complicated provision. I'll be very, very grateful to you. Thank you so much. Nagarja needs to say something. Yes, please, Nagarja, go ahead, proceed. What do you want to say? Santosh is asking, great, sir. Have a great day. What question we will get in examination? How would I know what question you will get in examination? The question related with this subject, definitely you will going to have in your examination. Kuldeep, thanks for your rich teaching, mentoring, and time. Thank you so much. You're welcome, everyone. Please revise the provision before the session day after tomorrow. So you would be able to get the maximum benefit. If you revise once, that would be easy for all of us. Shamli saying, thank you so much, sir. Understood everything. You made everything easy. Thank you so much for your appreciation, student. If there's any query, you can ask me, students. Otherwise, I will ask the technical team to close the session. Any query from anyone? I guess there is no more query left. So, Nisarg, can we close the session? Next session, we will discuss the problem of salary quality. After that, there would be house property session. Nisarg, are you there? Okay, please close the session.